But Fed Chairman Jerome Powell faces his first big test at the Fed's meeting this week, navigating between a prior forecast to hike amid strong growth numbers, a market and a president screaming no more, and a weakening global and domestic economic outlook. Here's Oxford Economics writes, Fed officials' commentary indicates they are having a significant rethink of how much higher they need to move interest rates. Okay, let's look at their 2019 forecast. This is the dot plot put in a hopefully understandable way. This is how many Fed officials are at how many hikes, quarter-point hikes on your left, assuming December, okay?
Okay.
Work with me on this, Becky.
Two are at
1.5. Two, right, and you can see the median there looking for 3, 4, 5, some even 6 hikes next year, just so you know.
What?
Yeah. Yep, if you assume the quarter points in there. Some guys are way up there. Now, I expect this whole thing to move.
Throw those out like the Olympics. Throw out the high and low.
You can do that. You can do that, a trim mean, we might call it in economics.
7.
This whole thing's going to move to the left, I expect. That's going to be a big factor for the market. So we'll come back and we'll show you on Wednesday how that changes. Goldman Sachs says the market downturn will help the Fed ease off on the outlook. Quote, if financial markets have delivered greater restraint, the FOMC may not have as much work to do in pushing up the funds rate. Here's another way to look at it, Becky. See if this works better for you. I always like to throw things out there. Here's the actual number of people at a given interest rate. Does that work better? You can see that 4 of them are at 2.875, 4
yes.
at 3.125. You like that better?
Yes.
That's why I did it both ways to ask you.
Thank you.
Okay.
I'll take the latter.
Okay, so that's where they are. And again, I expect this thing to shift to the left. And I don't think they're done, but they have some more work to do. Some people think they're going to stop entirely, ought to stop entirely. And I will make one underscore of the Druckenmiller-Warsh piece this morning, which is I do not believe there has been nearly enough discussion of the balance sheet reduction. I think for the Fed, they have said policy-wise it's off the table as an adjustment to current economic circumstances. Their plan is to reduce the balance sheet by $600 billion. I have questioned Fed officials publicly about this quite a bit. They insist it's off the table. There's you can see on your screen there, Fed tightening, not now. And they're arguing to let the balance sheet do the work. I think there's some in-between kind of thing, but it's worth...
By the way, Kevin Warsh has been talking about it for a long time.
For a long time, and I think that there's not been enough discussion about the effects. As they say in the piece, if you thought it brought us prosperity and better growth on the way up, then you should be talking about the effect of it on the way down.